SoFi's Chief Financial Officer, Chris Lapointe, just finished a fireside chat with UBS where he talked about every segment of the business, in addition to a couple of new segments that they're looking at for 2025. In this video, I'm going to be doing a full breakdown of this along with some other SoFi news. Let's jump right in. Okay, so for those of you who were just watching me live, I was covering this event and we were chatting about what Chris Lapointe was talking about. And this is sort of a video on the fly, but I also want to recap some of my thoughts and some of my notes around everything that Chris Lapointe talked about. So the UBS fireside chat started off with a commentator asking questions around each side of SoFi's business. They talked about loan origination volumes for Q3 specifically, where we had some pretty good numbers if you remember the earnings report. Chris Lapointe said there's been really good momentum in originations year to date. They're maintaining their outlook for balance sheet growth. So they're not adjusting anything in their outlook. He said, we've seen some really good demand from capital markets, the best that we've seen in the last several years. They sold $6 billion in loans in 2024, not including the $1 billion for the loan platform business in Q3. The capital ratios are over 16%, well above the regulatory 10%. And this has been the best quarter, he said, for student loans since the first quarter of 2022 and the best quarter for mortgages since 2021. When he was basically asked in Q4 quarter to date if he could provide some guidance there about what they've been seeing over these past couple of months since Q4 started, he basically said, hey, we're really happy with the momentum outside of lending products. Financial services, we have good momentum in net interest income from growth in deposits in Q3, which they added 2.4 billion in that quarter, and non-interest income also doubled. And in this segment of non-interest income, he talked about interchange, which he said they expect to continue to grow in 2025. All of that is going to be non-interest income for financial services. And jumping back into lending for just a second, he said we expect to maintain healthy NIM margins over 5% as a function of the overall loan pricing betas, even in declining rate environments. And he also reminded everybody of the funding mix. Of the 23 billion that they have in deposits, over 90% of those are coming from direct deposit members. Over 98% of those are FDIC insured, which you know the threshold is $2 million. 85% of those loans are funded through deposits, and their goal going forward is to have between 85 and 90% longer term to be funded through deposits. So they expect to be increasing the amount that they have funded through deposits to about 90% going forward. He said that the consumer for SoFi is very strong. The annualized spend was over $12 billion in Q3, and that was progressing well in Q4. And in addition to saying, hey, we're happy with the balance sheet size of personal loans, and we expect to be originating at a healthy clip in 2025, he also covered some of the other segments, particularly with home loans. And I just want to spend a second on home loans. Even though it's the smallest individual contributor to the lending segment, home loans has less than 0.1% penetration. It has a huge runway, especially as rates continue to fall. Now they've offered more products in the home loan segment, home loan refinancing, HELOCs, home equity loans. And with regards to the loan platform business, he also mentioned that SoFi declines about 70 to 80% of applicants. And the loan platform business is a healthy way for them to meet the demand that they have both on the consumer side, because 8 out of every 10 people are getting declined, and the healthy demand that they have from capital markets, because they don't really need capital markets. They can self-fund their own loans from deposits, but they have demand from capital markets, and they're able to marry both of these together with the loan platform business, because what they're doing is they are originating on behalf of their partners. They're originating on behalf of other people. And Chris Lapointe highlighted multiple times that this is fee-based, it's low risk, it's capital light, it's a no-brainer basically for SoFi to be able to do this. And it's going to be a key driver of growth in 2025. So he's not mincing words with that one. He's saying it's going to be a key driver of growth. It's going to contribute more and more to the bottom line for SoFi's business for financial services. That is the main catalyst that many investors are looking at for financial services. Many investors are looking at financial services and scratching their head saying, how is this business going to keep growing over 80% year over year? The loan platform business is a key contributor to this because they can originate through capital markets and originate on behalf of these third party partners. And not only that, but just pivoting now to financial services, they have multiple levers that they can pull. They have operating leverage on financial services, especially with sales and marketing. Chris Lapointe highlighted that the main growth they're seeing is in financial services. And this is significant because the customer acquisition cost is lower in financial services. And he went deeper into this customer acquisition cost, saying that they're happy with the cost to acquire new customers because they're hitting their 30% EBITDA margins, and that they've been more efficient over the last several quarters to drive sales and marketing expense down as a percentage of total revenue because they now have higher levels of cross buying. They have 30 to 35% of all products now coming from existing members on the platform where they don't have to pay that second customer acquisition cost because more and more people are trying out new SoFi products, and that's helping them because they're gaining more products without having to spend the customer acquisition cost to essentially go out and try to get those customers. And yes, I talked a little bit about lending. I talked a little bit about financial services. And finally, he was asked point blank about the tech platform. And he said, quote, in the tech platform, we're feeling really good about where we stand with customers. We have not lost any deals. The pipeline is as robust as it's ever been. There's no issues with timing delays on Galileo. There's no issues with sponsor banks. And he also talked about the differentiators that Galileo had and also the regulatory aspect of how Galileo caters to these third party partners. And it's really interesting here, right? Because he was asked point blank about RFPs and where they are in the process, and for him to comment on competitors. And he basically skipped that question without taking the opportunity to comment on any of these things. I think it's because, as we've mentioned in the past, their hands are tied with a lot of these customers being large financial institutions. I mean, he said point blank, quote, we're starting to gain traction with larger, more established companies that have large installed bases in financial services businesses, AKA banks. So Galileo, I think, was the only part of this fireside that I think was lacking some details and that I would have loved to hear more about. I actually was mentioning, live as I was talking about this with the audience, I was saying, I wish we could have more firesides with David Foyer, the chief product officer for Galileo. I wish we could have more firesides with Derek White, the chief executive officer for Galileo. I mean, Derek White did the Banking Transform podcast, which I have a full clipped segment of. And in that short 1 hour talk, he laid out this perfect vision for Galileo, where it could fit in that ecosystem, what the future of banking was going to be like, what Galileo's contribution is to that future of banking. And I think that's someone who can really paint a picture to inspire the vision for Galileo and really talk about that AWS of fintech. But as it stands right now, Galileo is their lowest, individual segment from a growth perspective. And it's something that they're increasingly talking less and less about. They're more turning their attention towards the loan platform business and financial services ramping up in the short to medium term. So I really do hope that Galileo finds their footing again in 2025 with regards to the growth rates. And it sounds as though they're still on track for that. We just don't have enough details, right? I would love to see a breakdown on their earnings reports for Galileo cohorts. I would love to see Galileo counts or even a breakdown of industries so I can see as a percentage of the total what is financial services versus what is SaaS businesses, so on and so forth. But overall, some of the main themes that I saw from this fireside was number one, home loan originations is going to ramp up in a big way. Number two, monetization. He talked quite a bit about monetization, especially in financial services, saying that there's two main levers that they can pull. Number one is how big the total user base is, how many users we have in our ecosystem. And number two is how much money they're essentially collecting from each of those users. Right now, SoFi has $81 in annualized revenue per product. That's up over 50% year over year. And that's an area that they're focusing on improving over the next year. So monetization is a big theme, home loans is a big theme. And the two others that I found interesting were mentioned towards the end of the call when they were talking about SMBs, small businesses. We've seen SoFi recently, several months ago, actually, talk about SMBs, how they were partnering for SMBs. And Crystal Point basically confirmed the fact that, hey, we're not a principal originator in SMBs. We refer people out, we collect a referral fee, and that's all we do. Same thing with insurance. We refer people out, we collect a fee, and that's all. And for both of these, he said, we have not invested meaningfully in the overall marketing of that space. However, both of them are going to be serving as big growth drivers going forward. So it's something on the radar for SoFi to potentially expand in 2025 to SMBs, to potentially expand in 2025 to insurance, to essentially vertically integrate and bring them in-house to be an originator. And by doing that, they can bring more users into that ecosystem to further spur that cross-buying flywheel. And they can collect way more money by being a principal as opposed to being a referral out. I also saw news that SoFi recently cut their APY from 4.2% to 4%. I think that this is just a lever that they can pull to manage that growth effectively. If they see that demand is faltering, they're going to keep it high. But if they see that demand is strong, they can lower it and essentially just collect more money and be more profitable from that perspective. SoFi still has one of the highest APYs out there, definitely higher than all the traditional financial institutions. And so for them to lower it, they're front running the rate cuts that are going to be coming soon. But they're also, in my mind, seeing strong levels of demand where they feel comfortable enough to lower that APY because they're not really seeing lackluster demand in the market. Either way, I thought that this fireside was pretty insightful, that everything is going on track, that the numbers that they're seeing are very positive. I think that the real indicator is going to be when they report the last quarter earnings in January and they provide guidance for not only 2025, but I think they're also going to provide revised guidance for 2026 numbers that they introduced at the beginning of 2024. And once they do that, they're going to talk a lot more about product initiatives and what they have on the horizon of how they're planning to scale their business. Of course, they're going to talk more about the loan platform business. Of course, they're going to talk more about home loans and student loans and how those are going to scale in a falling rate environment. But I also hope they talk more about SMB and insurance and all of these other aspects that, we've been looking towards them for, and we haven't got too many details. But recently, we have got some more details in the form of Cash Coach and others for new product additions. The robo investing, the alt investing for IPOs. So we're going to be looking forward to that. SoFi stock is basically flat today. It was flat before we started the fireside. It's flat after the fireside. So no huge impact there. Business as usual for SoFi, continuously executing, but still some nuggets of information there, particularly with the loan platform business, with the operating leverage, with home loans specifically ramping up, with SMB and insurance ramping up, and also with financial services monetization per user. Those are the main nuggets that I personally picked up. Let me know what you thought and whether you picked up something that I might have missed. Let me know in the comments below. For right now, thank you so much for watching, and I'll see you in the next video.